The American dream. For generations, it's been synonymous with homeownership. The quintessential symbol of stability, prosperity, and belonging. But beneath the picket fences and manicured lawns lies a complex, often bewildering system that shapes not just our homes, but our futures, our communities, and our economy. This is the story of how the American housing market really works. It's more than just bricks and mortar. The housing market is a colossal ecosystem, a dance between supply and demand, interest rates and inflation, policy decisions and personal aspirations. From the bustling metropolises to the quietest rural towns, its pulse dictates everything from the cost of living to the health of our national economy. Understanding its intricacies isn't just for economists or real estate agents, it's vital for anyone who hopes to buy, sell, rent, or simply live in America. At its core, the housing market operates on the fundamental principles of supply and demand. Simply put, when there are more people who want to buy homes than there are homes available, prices tend to rise. Conversely, an abundance of homes with fewer buyers can lead to price drops. But what influences these forces? On the supply side, we look at new construction. Builders constantly navigate a labyrinth of factors: land availability, zoning regulations, material costs, labor shortages, and permit processes. These can significantly impact how quickly new homes come online. Think about urban sprawl versus dense city centers. The challenges of building in each are vastly different. Then there's existing housing stock. People move, downsize, upgrade, or relocate, freeing up properties. The rate at which these homes become available, often referred to as inventory, plays a crucial role. A tight inventory means buyers have less choice and more competition. On the demand side, several powerful engines are at play. Population growth is a major driver. More people generally means more need for housing. Economic health, particularly job growth and wage increases, empowers more individuals to afford homeownership. Demographic shifts also play a role. Millennials entering prime home buying age, for instance, or baby boomers downsizing. Interest rates are another critical factor. When mortgage rates are low, borrowing money becomes cheaper, making homeownership more accessible and increasing demand. Conversely, higher rates can cool the market by making mortgages more expensive. It's a delicate balance, constantly shifting, and rarely in perfect equilibrium. Buying a home is, for most Americans, the largest financial transaction of their lives. And that's where the intricate world of mortgages comes in. A mortgage isn't just a loan, it's a complex financial instrument, a promise to pay back a substantial sum, typically over 15 to 30 years, with interest. Banks, credit unions, and other lending institutions are the gatekeepers here. They assess a borrower's creditworthiness, income, debt-to-income ratio, and assets to determine eligibility and the interest rate they'll offer. This process, known as underwriting, is designed to minimize risk for the lender. But the housing market doesn't just rely on individual banks. It's deeply intertwined with the broader financial system. The Federal Reserve, America's central bank, indirectly influences mortgage rates through its monetary policy. When the Fed raises or lowers its benchmark interest rate, it sends ripples through the entire economy, affecting everything from credit card rates to, yes, your 30-year fixed mortgage. Once a bank issues a mortgage, it often doesn't hold onto it for the entire 30-year term. Instead, many mortgages are sold on what's called the secondary market. This is where entities like Fannie Mae and Freddie Mac, government-sponsored enterprises, play a massive role. They buy mortgages from lenders, package them into securities, and sell them to investors. This process injects liquidity back into the market, allowing banks to make new loans. The government also directly supports housing through various programs. FHA loans, VA loans for veterans, and USDA loans for rural properties make home ownership accessible to a wider range of Americans, often with lower down payment requirements or more flexible credit standards. These programs are designed to mitigate risk for lenders and stimulate demand in specific segments of the market, further adding layers to its complexity. Beyond the buyers and sellers and the banks, a whole host of professionals facilitate every transaction. Real estate agents are often the first point of contact. They act as intermediaries, connecting buyers with sellers, guiding them through negotiations, and navigating the often intimidating paperwork. They earn a commission, typically a percentage of the sale price, shared between the buyers and sellers' agents. Then there are appraisers. Their job is crucial: to provide an independent, unbiased estimate of a property's value. Lenders rely on appraisals to ensure the home's value justifies the loan amount. An appraisal considers recent comparable sales, the property's condition, location, and features. If the appraisal comes in lower than the agreed-upon sale price, it can throw a wrench into the entire deal. And before closing, most buyers hire a home inspector. This professional meticulously examines the property for structural issues, faulty systems, and potential hazards. Their report can uncover problems that might not be visible to the untrained eye, giving buyers leverage for repairs or a reason to walk away from a problematic property. Another unsung hero in the housing transaction is the title company. Their role is to ensure that the seller has clear legal ownership of the property and that there are no hidden liens, easements, or other claims that could affect the new owner's rights. They issue title insurance, protecting both the buyer and lender from future disputes. Over ownership. Mortgage brokers also play a significant role for many. Unlike a bank loan officer who works for a single institution, a mortgage broker works with multiple lenders. They shop around to find the best interest rates and loan products for their clients, often saving buyers time and money. Each of these players, with their specialized knowledge and services, forms a critical link in the chain, ensuring a complex process runs, ideally, smoothly. The housing market is not static, it breathes and fluctuates, experiencing periods of explosive growth, known as booms, and sometimes dramatic contractions, or busts. We've seen this cycle repeat throughout history, often with significant consequences. The most dramatic recent example was the 2008 financial crisis. A combination of lax lending standards, speculative investing, and complex financial instruments created a housing bubble. When that bubble burst, it triggered a global recession, leading to foreclosures, job losses, and a deep sense of economic insecurity. Understanding these cycles is crucial because they highlight the market's inherent volatility and its profound impact on the broader economy. Several factors contribute to these market swings. Rapid changes in interest rates, for example, can quickly cool or overheat demand. Inflation, if unchecked, can erode purchasing power and make homeownership less affordable. Economic uncertainty, whether domestic or global, makes both buyers and sellers hesitant. Local factors are equally important. Strict zoning laws in desirable areas can restrict new built, driving up prices. Conversely, a surge in development without sufficient demand can lead to an oversupply. Even geopolitical events or natural disasters can have localized, or even widespread, effects on housing values and availability. The market is a living, breathing entity, constantly reacting to a multitude of internal and external stimuli. For many Americans today, the dream of home ownership. Further away for first-time buyers and those with limited incomes. This pressure inevitably spills over into the rental market. As more people are priced out of buying, demand for rentals surges, driving up rents. This creates a vicious cycle, making it even harder for individuals to save for a down payment or achieve financial stability. The lack of affordable housing options is not just an economic issue, it's a social and community challenge. The dynamics of the housing market also fuel complex social issues like gentrification. When wealthier individuals or developers move into historically lower-income neighborhoods, property values often rise dramatically. While this can bring new investment and amenities, it can also price out long-term residents and small businesses, leading to displacement and altering the cultural fabric of a community. The struggle for equitable housing is a constant one, with policymakers grappling with how to balance economic growth with social justice. These are not simple problems with easy solutions, reflecting the profound and often contradictory forces at play within the American housing market. So, what does the future hold for the American housing market? Innovation is rapidly changing how we build and live. Sustainable construction methods, modular homes, and even 3D printed houses offer potential solutions to reduce costs and increase efficiency. Smart home technology is transforming how we interact with our living spaces, focusing on energy efficiency and convenience. Urban planners are exploring new models of mixed-use development, creating walkable communities where people can live, work, and shop without relying heavily on cars. The emphasis is shifting towards denser, more efficient, and often more community-oriented living spaces, particularly in urban areas. However, significant challenges remain. Climate change demands resilient building practices and adaptation strategies. The ongoing affordability crisis requires creative policy solutions, from reforming zoning laws to expanding rental assistance programs and incentivizing affordable housing development. Ultimately, the American housing market is a dynamic interplay of vast, impersonal economic forces and deeply personal choices. It's a testament to our aspirations, a reflection of our economic realities, and a constant barometer of our societal health. Understanding its gears and levers empowers us, as individuals and as a collective, to navigate its complexities and advocate for a future where the dream of a secure and affordable home is within reach for all. The American housing market is more than just a place to live. It's a foundation upon which lives are built, communities thrive, and futures are shaped. Its story is ever evolving, and by understanding how it truly works, we can better understand ourselves, our society, and the path forward.
If you like this video, subscribe the channel, share with friends and comments.